Welcome to Trading Lounge and the European indices. However, we're going to start with the S&P 500 because I think it's important to sort of understand that if this count is correct, obviously it's going to place more pressure on the European markets in a bearish mode. And in this particular case for the S&P 500, we'd been looking for the first impulse wave up from wave 4, impulse wave being 5 waves. And after 5 waves, we would receive an A and a B and a C, coming back to the 50-60% retracement level here. But as mentioned earlier, that all the retracements in the trend up here have been very shallow. So we could also expect this market not to pull all the way back to this point, but to the wave 4 of 1 lesser degree here, which still leaves it quite a distance here. Now, at this moment, we'd been counting the last little 5 waves up through to the top here, and that's in play here. So we're expecting a correction. We're starting to see some weakness in the market. And if I was wrong with this, then obviously the market would, and, rightly so. I mean, there's always a 60% chance the weather that's yesterday will be the same as today. So in this case, we've got this trend moving up here. It hasn't shown a change in trend as yet. We've only just pointed out that there's a possible 5-wave structure here. So a nice support on 2100 here would sort of eliminate that count and give us another new high here. So there's a few things that we need to sort of work through here. I'm just going to go to the 2-hour chart here, and this is really just about having, trying to understand what we're looking for in this correction. So first of all, the wave 2, we're looking back sort of at the 2000 or below, but we understand that the corrections have been very minimal. So we could expect if a wave 2 came down, then come back to the wave 4 of 1 lesser degree here. So it's still a fair way to go here. Now, if I was, if we got a break lower at this point here, then we know that we'd be on the right track at that stage. But the move down through here can be counted in a couple of different ways, especially when we look at the DJ and the NASDAQ and the S&P 500. And there's 3 different ways to count this, and you can have a look at the US indices for that. But in this instance here, we're just looking at this in terms of breaking down below this low here. If that is the case, there's also the case where this move down through here can be counted as 1, 2, 3, 4, 5 to here, as an A wave, and then a B wave, and then a C wave to this point here. So long as that move up here doesn't take that low out, then we can be moving higher through here. So on the 15-minute chart here, in this case here, just bringing this into perspective here. So even though I've got this as moving down here further, at the same time, as just mentioned, this can be essentially an A wave and a B wave and a C wave to this point here, then 5 waves up here, and then an A, B, C back again. So this level here at this 50-60% retracement level here, based off this low and this high here, they're both the same height here. So if this breaches this low here, then we know that we're on the track further down. But as it stands, it can move up from here based on up for 1 and back for 2 here, and then moving up here further. But I wouldn't turn bullish unless you had the 2100 here as your support, because this market could certainly just move up here a little bit and then fade from here and move further down from there. So we're still in no man's land here at the moment. We didn't want to go long, we don't want to go short. We're just seeing how this first leg in the correction unfolds and seeing how it is. So understanding that, or getting a feeling for that, and then moving into the European markets here, we had labeled, this is the Stoxx 50 2-hour chart. We were looking at this here in a different count here, but in this situation here, we've got this as basically 1 and 2 here, 1 and 2 and 3 and 4 and 5 for the 3rd wave. We're looking for the 4th wave. That line there's 38.2% retracement level. So technically it can come to that point there. As it stands at the moment, this appears to be corrective here, but we would need to see a push up from that low there, and we'd be looking for a move up into this sort of area here. Now I won't go to the 15-minute chart here. I'm going to go to the DAX and work at that as well. Here we go. So just a 4-hour chart, and starting from this wave 4 low here. So, you know, the US markets essentially have this wave 1 sitting up here. Okay, and we're looking for wave 2 to come back. Now, it's also possible too that that this can also be counted up here as 1 as well, in terms of 1 and 2 and 3. The problem is that wave, if this is wave 4 here, it overlaps wave 1, which is a bit of a no-no, and then up for wave 5 here. So that's why we haven't labelled that, but I want to leave wave 1 and wave 2 here just in case, because we need to sort of work with the S&P 500, of course, because they will move together, they can lag, and so on, but they sort of, you know, move back in on each other's pathway. So but in this case here, we're looking for wave 4 to come into play, and then a move up through here. So maybe I'll just cut through to the 15-minute chart and work this little area through here. So from this wave 3 here, we can look at this. I mean, this sideways correction here is it's a bit large for a wave 2 as such. You know, if we went for wave 1 and 2 here and 3 here, and then 4 here and 5 here, then it doesn't, this is a bit too wide for a wave 2 here. Wave 2 is normally simple and sharp, so it's better as an A and a B and a C wave for the A wave, back to the B wave here, and then down for the C wave. But I have a little bit of a problem with the C wave here. I've already checked this on the cash market as well. We have 5 waves from the top down to this point here. So I could count that as wave 1 and wave 2 here. This would be wave 3 here. This is a bit high for wave 4, but on the cash market it's okay. So, but the main point here is this move down through here has only got 3 waves in it, an A, B and a C, where it's just not, it's not finished, even though this is quite high here. So there's a reasonable possibility that this can just fade from here and come down into this space here, and that would finish that off there. However, if we got tested support, testing it here on this level here, 10,300, the top of group 1, well, then we can look to go to the long side of that point there. Okay, so you need that as a tested support. That would be one way to the upside there. I'm just going to have a look at a couple of other things here. One of them is the AEX Netherlands market. With this one here as well, this one has pulled back to the wave 4 of 1 lesser degree here, but it's also pulled through the top of this box is the 38.2 retracement level, and this is the wave 4 of 1 lesser degree. So it's sort of okay at the moment, but as I've mentioned before, you know, if we were going to line this up with the S&P 500, then we would need to change this a little bit here. We would need to remove these guys here as such and work this wave count in terms of 3, 4 and 5 here, and then wave 1 here. So this is the 61.8% mark down here. So if this market for whatever reason pulls down into here, then we would need to change the wave count here, and probably also on the other markets, European markets as well, for this. Of course, if we get support on the 450 here, then it's looking a bit rosy at that point, and we can start moving in long at that point. The whole idea with the S&P 500, the US indices and the European indices, is that we'd counted up correctly and we've got to the top of all of them, and we've just been patient and waiting for them to correct and looking at how they're correcting and see if we can, you know, really nail down the count with some confidence. But that's just not there yet, because the S&P 500, the DJ and the Nasdaq have all got different counts on the way down, and a lot of these European markets can be counted differently as well. So they're not fully formed just yet, and we need that evidence to lock into place before we start calling the market. So we're in neutral zone at the moment. We're in the guessing game at the moment with this correction, and we'll stay that way for, you know, a session or two until we get this figured out. Now, I want to have a look at one of the banks, because the banks are showing the positive side to the upside today. The Deutsche Bank is up 2.3%, and this Commerzbank here is up 1.8%, where other markets, Bayer and that, are down 1%. So it's kind of leading to the upside. Now, we've been looking at this market for a while. This is a daily chart here, and we're considering this. It's not a very good move up here as wave 1, and wave 2 is fine. But I can count this as 5 waves, but it's not the best looking 5 waves in the world. But we'll stay with it because the rest of the market is like that. And then we're looking up for wave 3 here, and we're looking for 5 waves in wave 3. So 1 and 2, which we're in now, and then 3 and 4 and 5. So wave 3 should be quite strong. So we don't kind of want to miss it here. And one of the interesting things here, I think, is that is the volume here, because you can see that generally speaking, when a market is in correction mode, so if we're going to bullish trend, a correction is normally on lower volume than the previous trend. And what we're seeing down here on this daily chart is you see diminishing volume coming into play here. So basically it's telling us that the sellers are drying up. There's no sellers in there as such. But we still need a little break to the upside. So the volume is in the right place for this, and we might be able to see that better on the 2-hour chart or 4-hour chart, but we just want to go in. Yeah, here you can see that the move down, this whole move here, you can see how it's diminishing volume through here. So that's starting to confirm that there's no sellers, and we're looking for a long trade here. So we had wave 1 here, wave 2 here, and then, as you know, we counted 1 and 2 and 3 and 4 and 5 here, which is different slightly from the other, from the indices in the European sector. So then the market fell out of bed in this wave A here, and then I was looking for wave B and looking for wave C down here. I know that we're working with number 8 here, big whole number here, so there might be more buying in here. Plus we're in the third of the third wave to the upside here. So this correction may be finished. This correction may be put in here, but we would need to see a break higher on those indices there as well. But of course, these sorts of markets create that indice price. So it will come from markets like this, banks, such, whichever is going to be leading to the upside. On the 15-minute chart here, just to move in here a little bit, such here. Now, we've got wave 1 up here on the 15-minute chart here, wave 1. So we've got the A wave here. The B wave, I'm not sure where to put it here. I've just put it there because we've got an A and a B and a C to here. So I'm not sure if this is down for 1 all the way for 2 and 3 and 4 and 5 to have wave C here finished as wave 2, and this being wave 1 to the upside here. So it's possible for this market to move up from here, but as you know, the S&P 500 has got potential to move down lower. So has the FTSE after a bit of a bounce. So it's a little bit tricky. We don't have the general trend behind us to go long here, so the risk is much higher. So I was thinking that if this gets breached here, and this is a market that's keen to you, if that high here gets breached, perhaps a very, very small position that's not going to sort of haunt you in your sleep. And then once that has been done, then we can look to add on 8.4 here and then 8.50 here. Essentially just adding, we'll look at it in a different light, but if this is going to move up from here, then this would be wave 1 and wave 2 here, and then wave 3. We'd see wave 4 across here, and then wave 5. So look, there's no rush. You know, we can move into it later on here, but I didn't want to leave wave 2 sitting down here while this is moving up through here and we're missing it, you know. So whatever position size you normally get, we'll just get 1/3 on that, because there's 2 levels of supply here, and that the resistance obviously is this block here, which is affecting this current little high here, and then of course the second block is this block here. So they're the things that we need to navigate to the upside, and that's why they'll cause corrections here. So no rush, but it might be worth looking at this and the Deutsche Bank as well on the upside here, and that could help with the indices as well there. All right, that's that. Thanks for tuning in. Cheers.